What's going on, everyone? I'm gonna rant just for a second. All right, if you guys watch my YouTube videos, you could go to the comments and you'll see, like, sometimes there's people making fun of me or saying like some like rude stuff. Where have they all been? Like, where, like, there's barely any left. Where did they go? You know where they went? They blew up their accounts. All right, and if you think that I'm happy that people are losing money when they don't agree with me, you are sorely mistaken. Because when you lose money on the stock market, you end up becoming very sad. You end up becoming very, very angry. So not only does that affect you as an individual, it affects everyone around you. It affects your wife, and it affects your kids. So why would I want that for anyone else? I want everyone to be happy, and I want everyone to make a lot of money. So what I'm going to continue doing, regardless, whether you like me or not, whether you agree with me or not, I'm going to be posting everything completely for free for life forever. I have a free Discord server. I'm going to share all of my trades, the Twitter, the YouTube, everything is going to remain free for life. And if you're saying, oh, it's not free, you have to sign up. Hey, moron, if I made it completely for free for everyone to join, I wouldn't be able to I wouldn't be able to track who is trying to join. There's already been at least like 7 different paid group leaders who charge monthly trying to get access to my server. So why would I give it completely for free for everybody so these guys can go and take my trades and charge you morons in their service? Oh, homie, it's not free. You have to sign up. Yeah, moron. I'm making you guys spend 2 minutes of your time to get free trades for life. If you don't want to do that, good for you. Keep on sitting on the sideline. Friggin' pay $200 a month for my trades or someone else's trades that they're already stealing. All right, continue doing that. Enjoy your life. Anyway, in today's video, we're gonna go over the SPY, the IWM, the NASDAQ, the 30-year bonds, the large tech stocks, the crypto market, and yeah, without further ado, let's get started with the video. Oh, and by the way, you guys are very, very early to this. I don't really tout my own horn, but you guys are very, very early to this. Nobody else does this. No one else is a profitable trader that makes money and goes and freaking makes YouTube videos and tweets and stuff like that. No one is bothering doing that. If I'm not charging you guys monthly and I'm not getting anything out of you guys, no one else does this. And you know why I'm doing this? It's because no one else is doing it. I'm trying to change the game, and I know that doing this helps people. Just wait. Just watch. Just wait. You guys are early though. Anyway, here's the SPY. All right. So basically, over the weekend, I alerted into some puts, not on the SPY but on the QQQ, and the reason for that is because clearly, it looks like we're very, very overextended. So if in the past you draw trend lines from essentially the lower wicks of the move, and you connect them to the next wick, the break of that trend line is really usually a good place to go short. So obviously, to remain in this uptrend, on Monday, we need to close above 444, which is doable, right? Obviously, the upper level of the Bollinger Band is continuing to go upwards, right? But now it's becoming increasingly difficult for this move to happen. Because now, if on Tuesday, the level that we would need to close above would be 451. So does it seem plausible that we're going to continue in this very straight up line? No, probably not. So that's why I swung into some puts. If they work, great. If they don't work, that's fine. We'll make some money. We'll make it up day trading. That's completely irrelevant, right? But we have to take the trade that has the highest probability. And currently, we are closing in on the upper level of the Bollinger Band. The VIX is very overextended to the downside. I'm going to show a chart of that as well. You can see the MACD is extremely overextended to the upside, but the RSI is still showing clear strength. So we do maybe have 1 or 2 days of green, right? This 449 level, this trend line right here is going to be super, super important. If we can close back above this level, say for example, we break down from this trend line, hold support again around like 440, come back down, and then reclaim this level right here, that is going to be very, very bullish. But I think there needs to be some sort of consolidation. Don't just blindly buy into the hype always, right? It's better to be patient and see how the trade works out instead of blindly buying into strength, all right? I was saying, stop blindly buying puts and stop fighting strength. Now is not the time to go long, all right? Now is not the time to go heavily, heavily long. It was time to go heavily, heavily long down here when everyone wanted to go heavily, heavily short. Now that everyone wants to go long, you want to freaking go long, and then have you not seen basically what's happened every single time you've done this before? Like when you wanted to go super, super long, every single other time there was extreme strength, you ended up losing a lot of money. So why don't you learn from your mistakes and not continue the same patterns that cause you to lose money? All right. The whole point about trading is learning from your mistakes. Okay. So clearly the SPY is very close to being overextended to the upside. And when that happens, you have to either not take a long position or you have to go short. So currently we are short for April something calls or April something puts. All right. For April 350 QQQ puts. So, yeah, there's that for the SPY. Let's take a look at the IWM. All right. So here's the IWM. Clearly you can see that's basically touching the upper level of the Bollinger Band already. Again, that's not the best sign, all right? It usually means that there is some sort of a pullback waiting to happen. Of course, if we continue moving upwards, I am wrong, right? But statistically, it's on our side that usually when this happens, we do have maybe 1 or 2 days left before we completely pull back. Anyway, you can see the IWM is in a clear uptrend as well. So now tomorrow, to remain above the uptrend level, we need to close down here, which is still very doable. But then the next day, we have to close above 210. So that's very, very overextended at this point, okay? And then after that, we have to close above 213. I don't think that's possible, right? And usually when you break an uptrend like this, right, there usually is at least 1 or 2 days of aggressive moves to the downside. That's why we took the puts. All right. And I believe it's a good risk reward trade. Obviously, we're not fighting the strength. We're willing to be wrong. But when setups are being given to us like this, it's a good risk reward. So anyway, you can clearly see the RSI is showing a lot of strength as well. The MACD is very overextended. Things look like they're ready for a pullback. 207.43 is clear resistance. We did not break above that. You can see we touched exactly on that level today. And then from here, the next upside level is going to be 208.76. And then there's no real resistance until 212. So, of course, 210 and then 212. So it's going to be really interesting next few days. Overall, it would be healthy for a bit of a pullback. But if there isn't a pullback, then we're going to day trade calls. And we're just going to, have a 10 or 15% stop loss and close out our puts. Call it a day and move on to the next trade. There's that. Now I want to take a look at the VIX. All right. Before we take a look at everything else, I want to take a look at the VIX. All right. So here's a chart of the VIX and the SPY side by side. All right. So the VIX, you can clearly see right here that it's closed outside of the lower standard deviation, the lower level of the Bollinger Band. And this is very, very rare. All right. So what I want to look at is the last time this happened and what basically happened on the SPY. All right. So let's go to the last time this closed outside. And it was in July 2019. Okay. No, it was in November 2019 first. All right. So November, you can see right here on this chart right here, November, we had one red day outside. And then the next day right afterward was also barely moved, right? So what happened here was this was that red day right here. And then we closed outside again. And then right afterward, we tumbled very hard. Okay. So you can see that that caused the VIX to spike. And basically us being very overextended to the downside was an issue. All right. So the next time this happened was July. Okay. And July, it wasn't as big of a fall, but this also was a bit of a top at the time. Okay. So you can see that it also clearly fell based off of these closes outside of the Bollinger Band. All right. So if you had bought puts anywhere here, you'd be in profit. Okay. And then the third most recent time that this happened was in August 2018. And you can see over here on the SPY chart, if you had bought puts over here when the VIX was outside of the lower level of the Bollinger Band, there was another huge drop. All right. So you can just continue to go back and back test this as far as you want. Whenever we close outside of the lower level of the B bands on the VIX, it is a good topping formation short term for the SPY. Okay. Regardless of how profitable, how much it falls, the odds of it falling are very, very high. All right. So that's why we ended up going short. Anyway, there's that for the VIX. I hope you guys understand a bit more of my logic of why I wanted to go short. This is a really, really good indicator. You could always use this, basically gauge, the strength or the weakness, the volatility of the market, and it's beautiful. So you guys could always use this now moving forward in your trading. All right, so there's that for the VIX. Now I want to take a look at the large tech stocks, 30-year bond, see if it's relevant, and then the NASDAQ. All right, Apple. We closed right above 163.76. This is clearly bullish because we have way more room to the upside before we touch the upper Bollinger Band. Everything, it looks decent, right? Let's take a look at Microsoft. Microsoft, we closed right below 390. Everything looks pretty decent as well, right? Take a look at Amazon. Amazon, very, very decent. We're basically at the upper level of the Bollinger Band, very similar to the IWM. And the RSI looks very, very strong. All of these indicators look bullish, right? Google. Clearly had a very, very strong day as well, right? It's closing in on the upper level of the Bollinger Band. And Tesla, very, very bullish as well. Close the upper level of the Bollinger Band. This bull flag is now playing out, right? So 926 is basically the next level of resistance. So basically all of these tech stocks are showing strength, but we're in puts because this is all of these moves are very, very overextended at this point. So with that being said, let's take a look at the 30-year bond. 30-year bond is not really showing much of anything. I think it'll make more sense to show and give an analysis on it if we break down below these levels of support, or if we have like a monster move to the upside. Then we can see what happens with the bonds. But currently, we're bottoming out. Basically, when we bottom out like this, it's bullish for the stock market because we didn't continue falling lower. And we saw that in the equities market, we were rallying as we bottomed out over here. All right. Not much else to say, to see really in the bonds. Now let's go ahead and take a look at the NASDAQ. All right. So we are short NASDAQ. The reason for that is because you can clearly see there's an uptrend here, right? It's perfect. Great. Lots of strength. We're closing in on the upper level of the Bollinger Band. And on Monday, for us to remain above this uptrend, we need to close above 355.65. That is doable, right? We could potentially close above this level, which is fine, right? But it's starting to become much more unlikely due to the weakness that we saw in the VIX. And then on Tuesday, the level that we need to close above is 366. So does this make sense that in the next 2 days to remain in this uptrend that we'll close above 355 and then the next day we'll close 11 points higher at 366? Obviously, it's not, right? So that's why the odds are in our favor to start shorting at these extremes to the upside. All right. And again, you have to be completely ready to be wrong because there's just an extreme amount of strength here. So we could just continue to, even if we break this uptrend, we could just not fall very sharply. We could just hold these levels and then continue on higher. and not maintain this uptrend, which is completely fine as well. So we have to be ready for that as well. But overall, we are short the market due to this extreme strength that we see. And now's not the time to go extremely long. The time to go extremely long is when we are at levels of support. And essentially, it's time to either be neutral or bearish, in my opinion. So until we see a retracement. So there's that for the overall stock market. Now I want to take a look at the crypto market, because the crypto market has been a very good indicator of what is to come in the stock market. All right, here's Bitcoin. All right. And about 2 weeks ago, right, we saw Amazon's MACD. Basically, the blue MACD line was very extended to the downside. And it looked very disgusting, right? And that basically signaled a huge move to the upside for Amazon. And that's exactly what happened, right? So now we're basically seeing the reverse on Bitcoin. We can see Bitcoin's MACD is super overextended to the upside. And this MACD, it looks very abnormal. Usually when this happens, it's signaling a downside move, all right? And again, this is basically why Bitcoin is down 2% for the day so far, right? We can easily see Bitcoin come back and retest 40,000, which is this trend line here, or back down to 39.6. And both of those are extremely plausible to happen before the New York Open tomorrow. Okay, this indicator is not bullish right now. This doesn't look healthy, and this doesn't look sustainable. What needs to happen is the blue MACD line needs to start moving downwards, and this yellow MACD line needs to continue moving upwards, and give some time for this momentum indicator here to cool off. And that's exactly why I believe people that shorted against this level are loving it, because of all of the indicators being super overextended. Of course, price action is king, right? But you need to trade with everything in mind and everything in conjunction. So regardless, you know, if we close above Friday's highs, then sure, you know, we can come back and retest 44,000. But clearly, you know, we're looking to reverse here. And this is a good sign that our puts are going to be profitable as well. So really, you know, having a retest back down to 39.6 or to 40,000 is going to be completely plausible, especially because of this indicator. So there's that for the overall stock market. If you guys liked the video, please subscribe, like, comment, do all that good stuff. The link to join the Discord is in the server. It's going to be in the comments, and it's going to be in the channel description. And I hope you guys learned something and have an amazing Sunday. Thank you.